Right, Anna. So, hi, friends. So, I'm back with another video, right? So, this is going to be problem number 69 in practice manual of CA final January 2017 edition. Okay. As you all know, this particular problem solving from the chapter decision making of marginal costing is in the interest of CA finance students in specific, but even CMA final on all these guys can benefit from this particular video. Okay, right. This particular video is application of shutdown point concept. So before you see this particular video, before you try to understand the problem that I'm solving here, my advice would be to please go and watch my other video on shutdown point concept. Okay, so you please go and watch that particular video, and then you come over here so that you'll try to follow this particular video better. Okay, right, guys. So without wasting any further time, let's go for the problem. Right, Nana. So as you can see in your screen, so this is the sum, right? This is problem number 69. So if you don't have any material, just you take the screenshot right now what you're seeing on your screen, so that it will be helpful for you tomorrow, I mean later, to watch the video and follow the problem. Right, guys? Okay, chalo, let's check the video. So Ravi Limited is considering the discontinuance of division C. So he's considering that particular division. The following information is given. So you've got sales maximum achievable is given, division A and B, okay, division C and total is given, less variable cost, division A and B, division C and total. You have contribution less specific avoidable fixed cost. Then you have divisional income. As you can see, division C is giving obviously loss. So maybe that is the reason why Rabi Limited is considering the discontinuance of division C. We'll see that. The rates of variable cost are 90% of the normal rates due to the current volume of operation. There is adequate market demand. For any lower volume of operation, the rates would go back to the normal rates, which means what do you mean by lower value of any operation? In case if you take a decision to stop division C or discontinuing division C, in that case, the volume of operation will be low from the current level, which means you have to revise this variable cost, because right now they are actually 90% of what they are. Then if you take a decision to stop division C, then this cost will increase, which you need to consider while taking that particular decision. Okay. Then facilities released by discontinuing division C cannot be used for any other purpose. Okay. You are required to evaluate the decision to discontinue division C using relevant cost approach. Okay. So that is the total question, right? Okay. Chalo. So I hope you guys have taken screenshot of this particular question. So let's get into the solution. Okay, Nana. So let's go to the solution. In order to really solve this particular problem, you should know the concept of relevant costing. I haven't made any video based on the concepts of relevant costing so far, but you should have known this, as well as you should know the concept of shutdown point. If you know both these concepts, then this problem should not be troublesome for you, right? Okay, anyway, let's try to solve this. Now, so basically what we have to do, he is talking about discontinuance of that particular division, right? So it is nothing but, to put it simple, shutdown point decision, which is actually trying to take, which is nothing but that discontinuance decision, isn't it? So that is what the question is trying to say. So we need to take the decision whether it should be recommended. I mean, it should be good to discontinue, or you should advise the company to what, continue the operation. So let's see whether you need to shut it down or you have to continue. Right. Whenever there is a decision with respect to shutdown point, I hope you have seen my conceptual video. In that case, we need to compare only two things. One is avoidable fixed cost should be compared with contribution that you earn when you're trying to run the company. See, there are only two choices when it comes to shutdown point decision. Either you will shut it down, either you will shut down your factory, or you will continue. your operations. So if you continue your operations, you'll be selling goods and thereby you'll be earning contribution. If you shut down your particular operations or company, then you'll be saving some fixed cost, and that we call it as what? Avoidable fixed cost. So when you try to take a decision with respect to shutdown point, obviously you should be comparing these two. If I shut it down, this is what I'll be saving, which means I'll be earning this much. If you continue your operations, then I'll be earning contribution. So let's compare. Whichever is high, based on that we'll try to take the decision. Suppose if contribution is high, then I would like to continue my operation. If my avoidable fixed cost, what I save, what I save once I shut down my operations, if that is high, then I'll say that you better shut down your particular wing, or you try to discontinue it. That would be my answer, right? So let's compare. Now, if you look at the question, the avoidable fixed cost is 4,14,000, isn't it? That is given in the question. And the contribution that you earn, which is also given in the question, is 2,41,500. So, which means directly there is a difference of, I think it is 1,72,500. That is extra savings. That is extra savings due to discontinuance or shutdown, right? So which means if you shut down your company, you'll be saving this much of fixed cost. How much? 4,14,000. And if you continue your company, if you continue the operations of that particular division, then you'll be earning a contribution of only 2,41,500, which means on the face of it right now, it seems that there is a difference of 1,72,500, which will be extra savings if you try to discontinue or if you try to shut down. But it doesn't stop there. There is more to it. So let us see what is the remaining things that has been there in the question, right? If you can see, there is an additional variable cost due to shutdown. I can say shutdown or discontinuance. Okay, discontinuance. As you can see in the question, there is an additional variable cost. So what is that? Right now the variable cost is 20,70,000, which is 90%, which represents 90%. But once you take a decision to discontinue that particular division, in that case it will go to its normal level, which means it will go to 100%, which means it will increase by 10%. So I'll take the 10% only. It's very simple, Nana, because 20,70,000 divided by 90% will give you 100%. That 100% into 10% will give you increase in cost because of shutting down or because of discontinuance. So that will come around 2,30,000, if you can use your calci, which is a cost. Got it? Right. So which means already we have seen that there is a benefit of 1,72,500 if you shut down your factory. At the same time, there is a loss of 2,30,000 if you shut down your factory, because only if you discontinue, I'm not talking about the factory, I'm talking about that particular division. Only if you discontinue that particular division, then your cost will increase by 2,30,000. So which means there will be a net savings or net earnings of how much? 57,500, which is the difference between 1,72,500 and 2,30,000. So therefore, the decision of discontinuing division C will not be beneficial for the Rabi Limited, that particular company, and it should review its decision based on the relevant costing concept. So it's pretty simple. What you have to understand here is, I'll try to sum it up for you guys. If you discontinue that division C, you'll be saving 4,14,000 of avoidable fixed cost. But at the same time, you'll be losing a contribution of 2,41,500. Therefore, there is a net gain of 1,72,500 when you try to discontinue division C. But in addition to that, your variable cost will increase by 10%, which means it's going to be increased by 2,30,000. So there is a benefit of 1,72,500 if you discontinue division C. At the same time, there is a loss of 2,30,000 because there is increase in your variable cost. So in that case, there is a net loss of 57,500 if you take a decision to shut down that particular division C. In that case, will you shut it down or will you continue? You will continue, obviously. Are you able to get me? Right, guys? So that's the problem. That's problem number 69. I hope you guys have enjoyed the video, right? I'll try to repeat it one more time. So this problem, if you need to solve this, you need to know the concept of relevant costing, as well as you should know what is shutdown point concept. Only then you will understand that if at all I have to take a shutdown point decision, then I need to compare avoidable fixed cost with contribution. Are you able to get me? Because I've explained that in my conceptual video clearly. Please go and watch that particular video in my channel. And then I came to a conclusion that if I shut down, then I'll be saving 1,72,500 extra of division C. Then also I came to know that in addition to this savings, there will be an extra cost of 2,30,000 because of shutting down that particular division C or discontinuing division C. Why? Because right now your cost is at 90% of the normal cost. If any discontinuous happens, then the cost will go back to 100%, which means the cost will increase by 10%. This 10% is increase is only due to what? Discontinuance of division C, which is nothing but shutting down. Therefore, there is a net loss of 57,500 when you take a decision to discontinue division C or you try to shut it down. Therefore, our recommendation would be not to discontinue. You better continue with your division C. Right, guys? Okay, I hope you have liked this video. Please share, subscribe, and please do comment, because only if you comment, I'll know what you guys are feeling, and based on that, I can help you out, guys. So shortly, within another 24 hours, I'll come up with 2 more videos. So subscribe to my channel and stay tuned, and all the best.